crazy. It's weird. It's like every single time it just reversed. It's only been this week though. It's crazy because like if you look from like right here from the 11th, it's like you get a sell signal reverse like right away. This week's been crazy. It's weird. It's like, all right, close that one. It's like a bit for the most part. All right, people are starting to come in. So like if anyone has any questions, feel free to put them in the Q&A, and then we can go over, you know, whatever questions you guys have, or if you guys want us to analyze anything during Asia session. Market's been pretty slow for Asia session this whole week, so I'm not really anticipating any big moves or anything. But we can go through. I think someone wanted to go over the US 30 calls that we had this week, and then we'll probably go through that. It probably shouldn't take too long. Otherwise, if you guys have any other questions, feel free to just drop them in the Q&A. Yeah, see, literally every position was like straight reversal. Like, so the week started right here on the 8th. First sell signal right here, straight to reversal. I mean, we could have, if the stop loss was placed above the previous swing, which is up here, it would have been fine. But I mean, that's a pretty big swing. Let's see what else we got here. This one actually looks like it was fine, but the beginning of the week was kind of off. So this would be the first signal. But there's no breakthrough on any of those. AJ, there's some reversals right there. I don't happen to AN like this crazy move right here. Aaron, you remember this move on?
Yeah, that was random. That was crazy.
Yeah, I mean, this was a crazy move. It hit our full TP, but it just started consolidating after that. Like nothing after that. Yeah, these moves on AU are weird too. We had like this sell signal right here, and then it just reversed straight up after. So. I mean, it seems like a lot of these moves could have been okay if the stop loss is placed like really far off. But yeah, I don't think we wanted to take that much of a risk on a Sunday. It was trending up, so we thought it was going to keep going up, but it looks like this buy signal right here, once it triggered, it just reversed hard. All the AUD pairs and GBP pairs moved really weird this week. I'm not really sure what happened, but I mean, it's all good. Roll with it. So let's see this one here. Yeah, this is the one that we took. This was straight reversal. I don't know what happened with KU on this one. So Susuk said, very much looking forward to next week. Yeah, and I was saying here, thankfully I made enough off US 30 this whole week. Otherwise, it would have been tough if I didn't take any US 30 calls. But those one-a-day US 30 calls have been pretty decent. The only loss was yesterday. Today was a TP1. That's where I exited. I actually got into that trade twice. Let's see if there's anything else. I'll give it a few more minutes for people to hop into this this webinar before we go over US 30. We can pretty much go over all the US 30 ones for this week, and then we can also dip into other indices if anyone wants to look at anything. I think we were planning on checking out DAX. A lot of people were asking about DAX, which is a German index. Pretty much the same thing as US 30, but just with German stocks. Let's see. Yeah, this was KJPY. Aaron, for KJPY, we hit TP1, right?
Yeah, we hit TP1, yeah. Then it's reversing right now.
Oh, yeah, that's crazy. I think we entered down here. Is KJPY still active? I still have a stop loss up here, but it hasn't triggered. I should start adding the dates to these so I know which one they're from. Because we had a stop loss set up here, but I never, it looks like it was never triggered. So I don't know if this trade was still active.
Probably is. We probably entered after, let's see.
Because the stop loss is placed up here, so the entry must have been right here.
Exactly.
But it looks like it would have hit full TP because if the stop loss was right there.
I think that one did hit 4 TP. I think CHF JPY hit TP number 1.
Oh yeah, this one's still active. I got stopped on profit already because we made it down to TP1 down here, and then it's still active. The people are still in it, but I got out just because market's been super off today. Not today, but the entire week. EA, you're thinking about buying EA? Did you say that, Aaron?
Not possible sell.
You know, I was thinking it's probably better off if we just if we confirm the rejection, like how it rejected off the support, and then it's followed by a buy signal like it was right here.
Yeah.
As you can see, that was a huge move. So like if we entered right here, it's like a 500 pip move. That's crazy. And then similar to what happened right here as well, rejected off the support.
Mm-hmm.
We entered off here. See, the only problem with EA is it moves so fast. You have to have like a stop loss, but then it would have hit TP at some point. I don't think I called this, but I had it under pending. I think I shared the idea, but I didn't really I decided to take it. This is the year CAD from yesterday. It's still active. Looks like it's coming down. But like I said, if we were to identify the rejection points and then we just take it following the signal, whether it's a buy or a sell, it moves pretty smoothly. I mean, it's just this week. This week there was a ton of all the euro pairs are fine, but all the AUD and GBP pairs, they all had like some weird movement, like hard reversals. Like for your CAD, we could have taken either signal, a sell signal right here after it rejected off this point. Let's see. Yeah, so if we rejected off this point right here, followed by the sell signal, could have rode this down right here for 100 pips. Same with down here, rejected off this point down here, followed by a buy signal, and then clear shoot up right there. We could have rode this. I think we got too cautious. This was around like Monday when Sunday was just moving weird, and then we just decided not to take these. But I mean, this could have been the difference if we took the non-AUD, non-GBP pairs. It's like the only ones that are really acting kind of weird. EJ is still active if someone's taking that. So yeah, the rejection off this resistance up here followed by the sell signal came down pretty hard. And it's kind of it's like a common pattern. Like if there's a rejection off the support or resistance and then it's followed by a strong bullish move, it usually follows through. Like right here, it was rejection, straight bullish candles, back to back to back, and then followed with a buy signal. This could have been rode up for 60 something, 100 pips. I mean, full moon would have been close to 150.
Hey, Shawn.
Yeah, what's up?
Hey, they're talking about passing another stimulus bill tomorrow too, so I think that may be the reason why a lot of U.S. pairs has been acting up.
I think someone mentioned it. I think it got shut down right when it got presented today.
You got shut down?
Yeah. They presented today and just got shut down. They didn't even bother looking at it.
Oh, wow.
Yeah, I mean, there's no point in really looking at the, yeah, Dijon said, he said, hell no. See, there's really no point in us really, focusing on these FX pairs. Unless there's an FX pair you guys want us to look at, then we can take a look. But otherwise, it seems like the only thing that's really been working well this week were indices, specifically US 30. So, I mean, someone earlier asked if we could go through, the K2 strategy that I've been applying for the daily US 30 trades for this week, just to show you guys how it works. And it's real simple. I'll just take this off. I think let's go through gold real quick. So I'll go through gold real quick before I go to before I get to the indices, just so we can go straight through with that. So let's go to gold real quick. I'll go on the 4 hour. Turn on the K2SR. So it looks like it broke this resistance up here, and what it looks like it's going to be doing, looks like it's probably gonna keep pushing on up to test this resistance up here. So many pips that is. It's about, I think this is 74 pips, 74.7. So what it looks like it's probably gonna, let me zoom out. Yeah, so it went into consolidation and it pushed up a little bit. So this is kind of what I see happening right here. The only problem is that there's a pretty strong resistance right here. I guess you can consider this a triple top. And it's getting pretty close to it. So actually, it might reject right off this actually. It might not even make it all the way up to the resistance. So what might happen is it's already rejecting off this point right here. And you can see that it's rejected from this area pretty far back. You can see the strong wicks that push up, rejection, rejection. 1, 2, 3, 4, 5, 6, 7, 8. So it's rejected off this point about 8 times. But if you group those into rejection points right here, right here, right here, right here, and right here, that's probably a triple or quadruple top. So I think it might be coming down after that. So it looks like it's pushed up far enough. It might go up to the resistance, maybe not, because it already rejected off here. So what might happen is it might come back down. It's like in a pretty big consolidation phase. It looks like this whole area right here is consolidation for gold. So let me, it's a pretty wide consolidation right here. So let me just color this a different color. So yeah, this whole area right here looks like it's a consolidation area for it. So what might happen is it might reject off this resistance. It might even consolidate within this area right here. If not, probably push down further as far as this bottom, and might just keep bouncing around because gold doesn't really move that much during Asia session. So I wouldn't anticipate much movement until London breakout in about, what is it, 7 hours. So it doesn't really look like a good area to, I mean, if you want to take a risk, personally, I would take a sell because it rejected off this area. So I wouldn't sell right here, but I would probably put a sell stop somewhere down, a little farther down where there's some cushion, probably at around 1726 right here, or maybe even higher, 1727 actually. I mean, for a horizontal line there, because I think odds are it's probably going to come down. It's not going to go any higher. This looks like a pretty strong resistance point. So let me just draw a line here so you can see. Yeah, so since price is already at this resistance point right here, what might happen is it might reject off there, and I'd probably have like a sell stop right here. So if it does come back down, you can catch that momentum swing down, kind of similar to what happened right here. You can see, trying to look for a strong bullish candle. So it's kind of similar to what happened right here. Is 2 strong bullish candles, or it was a whole bullish move right here. It's 1, 2, 3, 4, 5, 6. 6 bullish candles pushed up, rejected off, and then came all the way down here. So it's kind of what might happen here. It's not guaranteed, but this is more likely than not to happen right here. Since it's tested this area so many times, as you can see right here, it tested it, came down, came back up, tested it, and then it came straight down. Kind of similar to what happened right here again. It came up, tested it, and rejected straight down. So what might happen is it might come down to this middle area right here, if not come all the way down to the bottom. So I think you're better off possibly taking sell right here, because I don't think it's ready to break through it, especially since we're getting close to the end of the week. I mean, it's clearly in a strong uptrend. Well, it was in a strong uptrend, went into consolidation. And then I think if price ever closes up here, then it's probably going to continue on upwards. Otherwise, it's probably just going to keep consolidating unless it reverses. But who knows? This week's just been weird. It's like, the US dollar has been strong, even though a lot of coronavirus news has come out. It's just, I don't know, fundamentals just don't line up properly. So if you were to take this, I would trade within this range. I'd probably take a sell. But like I said, yeah, if you want to take a sell, I'd probably put a sell stop right here at 1727, so that when it does come down, it'll automatically fill your order, and then you can probably place your stop loss above the swing, or not the swing, but the resistance, somewhere around there. You don't want to put it too close, because what might happen is there might be a stop loss hunt right there. But this is a pretty wide, this is a pretty big movement. So I don't know if you can handle this drawdown if that's the case. But it looks like it could push all the way up to this resistance up here if it does spike up like it did right here. I'm not sure what caused the spike, but I wouldn't be surprised if it happened again. So if you put your sell stop right here, you could pretty much write it down either halfway, which is nice, about 1,000 pips, or you can write it all the way down, or you can try to write it all the way down for it's a lot of pips. What is that, like? Yeah, 1,000, or it might be more than 1,000 pips. I don't really trade gold, so I'm not sure what the valuation is for pip numbers in gold, but yeah, I would definitely look at this from a sell bias. Or as you said, that news caused a spike. Yeah, I can see that. Yeah, because over here there were no other spikes. There's just a spike right there. But this is definitely a strong resistance point. So if you guys want to line up that sell, looks like Shawn has a he's gonna call gold, so he's gonna have that in a K² commodities. So guys, keep a lookout for that. All right, so I think that's about it for gold. There goes your analysis right there. Like I said, it's probably going to come down, test the middle, or it might come down and test the bottom right there. But it's probably going to range within this area, probably till next week. I don't know if there's news tomorrow. Aaron, do you know if there's news tomorrow? I'm going to check the news real quick. Let's see. Looks like there is heavy, or no, let me refresh this. Yeah, so it looks like there's heavy Euro news at 11 p.m. So in about 6 hours, there's heavy German preliminary GDP release, and then tomorrow morning there is heavy USD news at 5:30 a.m. With regard to U.S. retail sales. So I think those are the only two big things to look out for. Otherwise, I think you should be fine. I'm not sure if the Euro news will affect this, but for sure tomorrow morning, the U.S. news is definitely going to affect gold, and who knows how it's going to affect it. You guys have seen the market this week. You can literally go either way. But yeah, there goes gold for you. If you guys have any other questions for us to analyze any other pairs, feel free to let me know. Otherwise, I'm just going to start off with the US 30 calls for the week for the member that asked for it. They just want us to go over the strategy real quick. It's really simple, so it's not going to take too long. CC wants us to look at UJ, so let's look at that real quick before we move on. UJ, so for UJ, let's see. So UJ looks like it is in it's sort of in a downtrend. If we're mapping it from here, I'll just take the lines off so you guys can see better. So it looks like it's sort of in a downtrend, but it does look like it's in consolidation right now. So if we line this up from the top, I mean, it's an ugly downtrend. It's not a clear downtrend, but it's obviously been moving down because we have a higher top. I mean, a higher high. So this is the high. We have a lower low, a higher low. Actually didn't even establish a lower low. It kind of just started consolidating from there. So it was trending down. Let's see. Yeah, it was more so like trending down right here. And then what happened was it started consolidating down here. Actually, this is a whole consolidation. Because I mean, you could consider this as a short-term downtrend, but it really consolidated right here, and then it went down a little bit, slightly, right here. And then, yeah, this literally just looks like it's hard to tell because the zone is so big. This is a pretty big zone, but it doesn't look like it has a direction. I mean, kind of similar to how this whole week has been for a lot of other pairs. Forex. Let's see what the range is for this. So the range from down here. It's kind of a big range, but not really. 200 pips within 18 days. That's like a whole month. That's not really that much of a movement. You'd expect like a 50 pip movement per day for UJ since it's a major pair. So I think I would consider UJ in a consolidation phase right now. I mean, if you look at it from a short time frame, you can see that it's trending for these small little trends. So if we were to look at it from a trending perspective, I mean, I guess you can say that it's trending up from here. But it's just really weird because this whole week, JPY has been pretty strong, due to the coronavirus news and the U.S. unemployment and pretty much just the stock market. But for some reason today, it shot up just like with US 30 unusually. But the thing is, as you're aware, the market's been reversing a lot this entire week. So I don't know how long this will even go for. This might just go up for a little bit. It's not something I would personally enter because we took UJ earlier because we thought it would be coming down, which it was kind of a disappointment because let's see. So we entered, yeah, because it looked like it was coming down. So what we did is we identified these highs that it was establishing. Right here. And for whatever reason, the US dollar became strong and then it shot up. So what might happen is, I mean, honestly, you could go either way because you could either come up, test this resistance, or even test this resistance and come back down. Or what might happen is, and what's been happening a lot this week is that once we get a signal, it usually reverses. So right now we have a buy signal. I think it's actually going to come back down because we're getting a lot of false signals this week. So you can see here, everything kind of moves in a specific direction. So if we have a valid signal, it usually moves for a while. So right here we have, this isn't a valid buy signal because it's a bearish candle with a buy signal. So this wouldn't be valid, but right here we got a sell signal with a bearish candle. That's why it came down pretty heavy right there. So that was about 60 pips. Again, right here, you had a valid buy signal because it was a bullish candle with a buy signal, and this thing shot up over there for about 130 pips. The thing with this right here, or how the market's been moving this week, right here we have a sell signal, but it didn't really push down very far. It only pushed down about 37 pips, and then it reversed. So again, right here, what might happen here is it's probably going to push up to this resistance point, and then it could possibly create a double top and then come crashing down. Kind of similar to what happened here. So right here, it established a top, double top right here, and it came down. So I'll just take off the indicator so we can see better. Yeah, like right here was a double top. Right here, it looks like it was moving sideways. It tested, rejected, moved sideways, and then it came down. So I think right here as well, it might come up, establish a double top, and come down. Or who knows? Market's been weird, so it might break right through and then start trending up. But I think this would be a bit of a risky pair to trade right now. Yeah, I definitely would wait for some type of confirmation, because entering right now, especially that it's within the zone, I feel like a lot could happen within the zone, especially when there's no clear rejection down here. So as you can see right here, there's no real clear rejection. It's like a light rejection off here. But what might happen is it could even come back down right here. if it establishes a lower high. So right here it established a high, a lower low, and if it reverses right here, this could be a lower high and it could come straight down and switch into a downtrend. Because technically, if you look at it from here, it looks like it's in a downtrend. So right here, it was a higher high, lower low. I mean, this was a high, lower low, lower high, lower low, lower high. Right here, there was a lower low. And that's why we thought it was going to keep coming down, because I didn't think it was going to come all the way up here and you know, break the pattern. But I mean, I don't know. It's this week has just been off. So personally, I would wait for some more confirmation. So if you wanted to take a sell, I'd either wait for it to test the zone up here for a double top, or possibly if it closes below this support level and we get a sell signal, I think that would be the catalyst. So if you were to find a sell signal, then that would probably be the catalyst telling you to you know, trade in that direction. But personally, I'd probably stay away from UJ, just with all the U.S. news that's been released and the coronavirus news. I mean, it's just not following fundamentals. You wouldn't expect the U.S. dollar to be strong with all that news coming out, especially with the stimulus bill getting shut down. So it's just an iffy pair. Personally, I'd stay away from it, but if you do want to take it, I would just wait for extra confirmation. I don't know if there's anything else. Let's see. Yeah, let's see if there's any other questions. Yeah, you should just wait, CC. There's no rush, and it's Thursday. You know, like around this time, the market's just gonna start getting slower as we get closer to market close by tomorrow. We have less than 24 hours left, so tomorrow's Friday. In less than 24 hours, the market's gonna close. So once it gets closer to market close, people are gonna start selling off their positions, and you know, it's just gonna get flat, or it's just gonna move weird till then. So I'm probably gonna be done with trading by tonight. You know, especially after the week we've been through. It's been a rocky week so far, for the most part. Which is just the Forex market hasn't been moving very stable. So I'm probably just gonna focus on US 30 for right now. But yeah, if you guys have any other questions, feel free to go over to the Q&A and drop your questions, and I can go ahead and analyze what you guys want, or cover any theories or topics you guys want me to cover. Otherwise, I'm going to go back to US 30, and I'm going to cover the US 30 trades for this week, since a couple of people were asking. All right, so let's head over to US 30. Take out the SR because we're not using the SR. Some people are asking what I have, what's this on the side too. So these comparisons that I have on the side are they're the indexes for the currency. So if you know, if I'm trading the dollar against something, then I'll turn on the dollar index. I don't know if it shows up on this chart, but let's see. Switch to a dollar pair. Yeah, switch this to percentage. All right, cool. So if you look at my chart right here, it's kind of hard to see, but if you add the dollar index, this will pretty much show you, you know, the direction of that currency, how it's moving, looking at that specific index. So if I'm trading, you know, GBP versus JPY, obviously I want to be looking at the dollar index. I would be looking at the Japanese yen index, and then the British pound index. So if you do that and you turn those two on, you kind of see where, you know, the index is moving for that currency. So if they're moving opposite, so like right here, the Japanese yen index is moving up, and the British pound index is moving down. So if you tie that to, you know, the GBP versus JPY, you could kind of infer that the yen is going to be gaining strength. So if the yen is gaining in strength and the pound isn't, then you can expect this to come down. So I think we did call this during this week because I have a markup on my chart. So what you can expect for your GJ is that it's probably going to come down. And I just use this for extra confirmation. It's not necessary. but it does help if you want that extra confirmation for, certain pairs. So yeah, I'll take this off and then I'll head back to US 30 for you guys. So let's head over to US 30. It's right here. All right. So if you guys aren't familiar with the daily US 30 strategy that I apply, it's real simple. All I do is I take one trade on market open, and then I pretty much ride the momentum until that trade's completed. So let's start from the beginning of this week. CT also mentioned the midday trade at 10:30, so we'll add that in as well, just so you guys can see, for reference if you guys decide to take that trade. So let me just go to replay, and then I'll go to 6:30. And then I'll put the requirements here just so you guys, the new people here, or the people that weren't able to see this the last time I went over it, we can just go over it really quick. So this is the daily K2 US 30 strategy. So one, you just want to start at 6:30 a.m. Pacific Daylight Savings Time. New York Stock Exchange open. Next, identify the first K2 signal. And then next, enter on close of candle. And fourth, place a stop loss and TP stop loss at previous swing at intervals of 1,500, 2,000, 100 pips. So it's real simple. All you need to do is watch the charts once it hits 6:30 Pacific Daylight Savings Time. If you guys are on the East Coast, you guys have the real time. It's 9:30 when the stock market opens. Next, you just want to identify the first K2 signal. Once you do, you want to enter on the close of that candle. You want to make sure that the signal is intact. So right here, we have a sell signal, and it has a bearish candle. So this would be a valid signal. Right here, we have a sell signal, but the candle is bullish. So this wouldn't be valid because it's not matching. So they have to be matching. Right here, we have a bullish candle with a bullish signal. That's valid, and that's valid as well. And then after that, you just want to place your stop loss at the previous swing. If it's below 1,500 pips, then the minimum is going to be 1,500 pips. Otherwise, you're going to round it to the closest 500 interval. So let's go ahead and, so right here, 6:20, so this is 6:30. So at this point in time, on Monday, I believe, May 11th, at this time, the New York Stock Exchange open. So we're going to take the first K2 signal that appears after market open. So right here, we got a buy signal. And this buy signal is valid because it's a buy signal and it's a a bullish candle. So after that, we're going to enter on the close of the candle. So once this candle closes, we're going to enter a buy position right here. Right here's the swing at 990 pips. So that's too tight. What we're going to do is we're going to move it to 1,500. That's the minimum. So at this point, we're trading at a 1-to-1 risk reward ratio. And what we're trying to do is we're trying to catch 1,500 pips right here. So if we move this forward, let it run, there you go, profit target hit. So let me just make another thing over here, just so you guys can see. So this is 511.20 plus 1,500 pips. And then CT also mentioned how price generally reverses at 10:30 or past 10:30. So we're going to add that as well. So this is the main strategy. This is the main thing that I take, but I also started to implement the 10:30 entry. So we're waiting for 10:30 to hit now. So right here is 10:30. So this is midway through the market. And then now we're going to do the same exact thing. Instead of starting at 6:30, we're starting at 10:30, which is right here, and we're going to identify the next K2 signal. So right here is a sell signal, and it's valid because it's bearish, and it's a sell signal. So what we're going to do here is the same thing we did here. We're going to enter on the close of the candle. So right here, we're going to enter a short position on the close. The swing is right here. It's way too tight. So we're going to do exactly what we did right here and adjust our stop loss and profit target to 1,500 pips. So we're going to let this run. And there you go, profit target. So on that same day, we hit 3,000 pips total. So I'll just do this 5:11 a.m. And then same thing again down here. And then we're just going to change that to PM. So total from that day, we have 3,000 pips. So let's see. Cammy's asking, what's the best time for CST? How do you find it on the chart? I think Central Time is just an hour above Pacific Daylight Savings Time. So I think you guys are just an hour ahead. So you would base it off, instead of 6:30, you'd be looking at the chart at 7:30. So depending on your time zone, you can check online. Let me see if I could find time zone converter. All right, cool. So I got the time zone converter here. So let's see, 6:30 my local time, and then we'll change that to CST. So where are you located, Cammy? I can just put it in here if you have the sorry, let me see. Texas. Okay, cool. So yeah, I think Texas is only an hour ahead. So let me just type in Texas real quick. El Paso or Houston? I think it's the same, right? No, so that's Mountain Time. Houston is okay. So you'll be trading at 8:30 a.m. You guys are 2 hours ahead. So instead of looking at 6:30, you'll look at 8:30 your time, and you'll basically take the first entry once the market opens. So let me go down these questions real quick. Cami said, how do you know the buyer and sell signal? So this these vertical lines right here that give the buy and sell signals, that's a K2 indicator. It's right here on my chart. And to get this indicator, you can sign up on our website at k2trades.com. Basically what it does is it identifies the swings in momentum. So right here, we have a buy signal. So this is basically indicating that momentum is swinging upwards. So that's how we catch the momentum when the market opens. And then midway, as I mentioned, midway generally the market reverses. So right here we have a sell signal, and this identifies that momentum is swinging downwards. And that's why we take a sell from there. Candice is asking if we always do a 1-to-1 risk to reward ratio. Yeah, we personally I do, but technically it's not always 1-to-1 because once price moves into profit, generally we'll have the TP1 somewhere around the middle. Once it hits TP1, I move the stop loss and profit. So right now it's 1-to-1, but once you eliminate the risk, it's all profit from there. So it becomes 0-to-1 because you'll eliminate risk, and then from here you just pretty much write profit to the full TP. Similar to right here with the same trade, once profit reaches TP1, which is generally around the middle, so it'd probably be around this area right here. Once it reaches this area, we'd eliminate our risk, and then it's risk free. So from right here, it's either break even or make some profit, or full TP. Generally, I like to move my stop loss up as price moves up. So right here, it moved up halfway, and it moved up here as well. So I'd probably move my stop loss, get a horizontal line. So so first our stop loss would be down here, correct? And then once it moved to TP1, I'd move my stop loss to break even or in profit. So if this is TP1 right here, I'd probably move my stop loss a little bit above break even, just so if it pulls back, I'll make at least some profit to cover the spread and to cover commissions and whatnot, and then still have some money left over. As price keeps moving up to 75% or 100%, then I just slowly move my stop loss up. If you have access to the course, which I'm sure you do, Candice, you can check the videos in the K2 course, and it explains the different ways to adjust your stop loss in order to minimize your risk and maximize your profits. So pretty much I would have done the same thing here. So once profit reached 50%, which is somewhere down the middle, I'd move my stop loss to break even or slightly in profit. And then as it moved farther down to like 75%, I would move my stop loss to 50%. And then I would just keep sliding it down until it hits full TP. In this situation, if I wanted to keep riding it, I would remove my profit target, and then I would just keep sliding my stop loss lower and lower and lower. So as it retraced back, then I'd get stopped out in profit, and then you keep earning more profit as it keeps moving down. Similar to what happened right here. Once price broke ETP, you could have removed your TP, and you would have just slided your stop loss and profit higher and higher as it kept moving up. And then right here, as price moved down, it would have stopped you out in profit, and then you would have had full TP plus this extra profit area right here. So if you extended it even farther out, you'd have, instead of 1,500 pips, you'd have 1,800 pips. But it just depends on each person. You know, if you have a high risk tolerance, then if you have a high risk tolerance, then you know you could do this if you want to maximize your profits. If you're happy with 1,500 pips, which I mean most people would be, I would just take the 1,500 pips and not risk it. It just depends on you. If you want more, if you want to risk more, if you want to just take your profits and run, which is pretty much what I would generally do. Let me see what other questions we have here. Candace is asking, what time frames do you use for price action candle close? I don't trade price action, so I can't really answer that question for you, but generally price action would be better to be analyzed on the higher time frames, because on anything lower than even the 1 hour has some noise on it, but anything lower than the 1 hour, there's a lot of noise on those candles. So it's going to be hard for you to determine price action if you're analyzing them per candle. If you're analyzing them by support and resistance, then yeah, that's a different story. But your question's asking what time frame do I use for price action candle close, which I would use the 4 hour for the most part, because that would probably be the least manipulated candle, since it's four 1 hour candles in one. If you compare that to the 1 hour candle, there's a lot of other factors that weigh in, like the options market. People trade options, and generally there's a lot of manipulation on the top and the bottom of the hour, because that's generally when contracts close for some options contract, depending if you're analyzing it towards binary options or normal options. When they close, obviously price is going to spike in certain areas at those times, when the market makers and institutions want to push price a certain way. But yeah, I would generally go off the higher time frames. Let me see if there's anything else here. Yeah, Cami. So when we do this strategy, instead of looking at the 6:30 a.m. Candle, you're going to look at the 8:30 a.m. since you guys are 2 hours ahead. Candace is asking, sorry, let me go down the questions again. Candace is asking, what time frame do you use for the US 30 entry? So for the daily strategy, I take all the trades off the 10-minute, because what we're doing is we're trying to catch the momentum swing as soon as the market opens. So the market opened right here at 6:30. You want to take the first momentum candle, because that's pretty much going to signify the direction of price within the short time period that it's moving. So like I said right here, we're going to be looking for 6:30. This is when the stock market opens. As you can see, price kind of moved sideways a little bit, and then it shot upwards. But prior to this shooting upwards, it gave a buy signal indicating that momentum was going to be swinging upwards. So once you had this, you could enter a buy entry and ride it on up. And then, like I said, at 10:30, this is usually when price reverses after that first burst of movement. Because as you can see here, price kind of moves in waves. As we move forward throughout the week, I'll indicate that again so you guys can see. But generally, this is the first wave. Once market opens, we would have caught that. And then as market was getting closer to closing time, right here around 11, we caught it on the other way, moving down. So we pretty much caught profits in both directions. So let me keep moving forward. So this is on the 11th. This was Monday. So on Monday, we would have locked in 3,000 pips if you guys took both of the trades. So I'm going to fast forward to 6:30 the next day on Tuesday. Let's see, so on the 12th, 6:30 a.m. That's 4, 6. All right, cool. So this candle right here is 6:30 a.m. on Tuesday. This is when the stock market opened. So now we are going to look for, so if you go back to the requirements right here, same exact requirements. We start at 6:30 a.m. Pacific Daylight Savings Time. This is when the New York Stock Exchange opens. Next, we're going to identify the first K2 signal. So there's no signal yet. The market just opened. Now we're going to be waiting for the next signal. Right here is the first signal. So this is a strong sell signal. Let me check. Sorry, we got one more question from Craig. Is it possible to trade before market open, looking at the 5 a.m. to 6:30 time frame? You can, but through my testing, this is the most accurate system to trade from, because the thing is, if you're trading from 5 a.m. to 6:30, the stock market isn't open yet, and during that time, that's pre-market, so you're going to get a lot of unusual movements during that time, because there's going to be a lot of orders being placed, but they're not triggered yet. So a lot of people are watching those orders and they're trying to see what direction price is going to be moving. So you're kind of just flipping a coin at that point, because what might happen is in pre-market there might show a bunch of buy orders coming in, but a lot of people are going to do the opposite of that. So as soon as as you can see right here, let me see if I can. So so right here at 6:30 when the market opened, I'll just rewind it to here just so I can actually. So right here, you can see price was kind of moving up, and then as pre-market happened, this shot down, because as you can see right here, like you said, from like 5 to 6:30, from right here it started pushing up because all of the pre-market orders were coming in, so they're pushing price up. But as soon as market opened, it spiked it down. So you're gonna run into a lot of manipulation during this time. So right here it dropped about 600 pips. And this is why I wouldn't be trading around this time. I mean, it's possible to trade during this time, but personally, you don't really want to be trading when there's manipulation going on, because you're not going to have the correct direction in price. I mean, you could technically take every signal here, and you could probably make some money off that if that's what you wanted to do. Before market and after hours. So right here, you could have taken buy signal, roll this up. Sell signal. You could literally take every signal and try to make some profit off that. But the thing is, you're not going to have an edge when you're trading during that time. And you generally only want to be trading when you have an edge in the market. So like I said right here, so if I'll snap it from 5 to, all right, cool. So from this period right here, this is going to be pre-market. So you can see there's not very much movement here during this time, because right here you'll have a lot of the pre-market orders. You can see it drops, and then people try to do the opposite and they buy. So it's kind of going sideways. And then there's no real movement until the market actually opens. So the problem here is if you enter a trade during this time, which is possible, you can enter pre-market, but if you do enter around this time, the complete opposite could happen once the market opens. So if you enter right here, you could be screwed once the market opens right here and it shoots on upwards if you're in a sell. Similar to, let's see what the next one is. So the next one is right here. So from 5 to, yeah, it's the same thing right here. It kind of moved sideways until market opened, and then it picked a direction. So here we go from 5 to 6:30. So right here, it kind of dropped down and it pushed up again, kind of similar to what happened right here, same exact thing. You definitely want to be trading when you have an edge. Like right here, there was 2 signals that were given, but you can see that there was no clear direction set yet because the market hadn't opened yet. And then as soon as the market opened, it dropped down. So right here, if you try to trade pre-market and you took a buy right here, you would have been screwed because this huge sell signal came out right here. And this is why I don't like to trade during pre-market, because you don't really have an edge during this time. I mean, you could have an edge if there's something else that you're basing your catalyst off, but personally, I wouldn't really trade during that time. You only want to trade, the direct when price is actually moving. So right here, when the stock market opened, there's actual movement going on. There's no real guesswork, because the signal will give you the momentum, and then you'll just ride momentum in that direction. Similar to right here. So right here. But yeah, I hope that answers your question, Craig. If it doesn't, feel free to let me know. Maybe I can go more in detail. But I just don't see any. I don't see any edge during that time period. Let me see if we can go farther back. Maybe there is an edge, but I just don't see it. Similar to right here. So this was on let's see, Friday, last Friday. So from 5 until 6:30. So right here, you can see again the same thing happen. It kind of consolidated, shot up, shot back down. It pretty much just moves in a zone. So you don't really have a clear edge when taking a trade pre-market, unless there's something else you're looking at. Unless you follow the news and you're good with fundamentals, and you can figure out where it's going to go. But pretty much like right here. So if you took this trade right here, and you took the sell signal because you want to enter pre-market, you would have been screwed because the next signal is a buy, and then you would have gotten stopped out. So I pretty much just wait for actual movement, and then pretty much just ride that wave in whatever direction price moves at. All right, cool. So we'll keep going down the. That was a good question, Craig, because I've never had that question before. So that was good to know, for myself and for you guys. But if you guys have any other questions while I'm going over these, feel free to let me know, because I can just stop and go over any topics or any theories that you guys are confused with. Okay, so we'll go back to the trades for this week, US 30 trades. So like I said, right here, we're waiting for 6:30 when the market opens. So right here was 6:30. This is the candle following the market open. It gave a sell signal, so we identified the first K2 signal. Next, we want to enter on the close of the candle. So we're going to enter once this candle closes. Let me put a short position right here. And then we're going to put the stop loss at the previous swing, which is right here. It's about 1,000 pips. Like I said, that's too small. So the smallest will go. Minimum is 1,500 pips. We're going to bump that up to 1,500. And then we'll let it run. See how it goes. There you go. Prop target. So you guys, it's as easy as that. So right there, another win. So this is the next day, 5:12:20 a.m. for plus 1,500 pips. And this is what I like about the strategy. You don't really have to stress out very much, because you take one trade a day, or 2 trades if you're taking the PM trade as well, and then you pretty much just let it run, or exit early, and then stack your profits, and then you don't have to worry and stress out about trading like the rest of the day. But okay, cool. So there was another win for you right there. We can look for the 10:30 trade. So right here is 10:30. So we'll take the next signal following the 10:30. So 10:30 is right here. And the last signal was a sell signal. So it looks like the next signal would be a buy. So let's look for that buy. Looks like it never came. And if it doesn't come, then that's fine. You can just skip it. I generally wouldn't trade once it gets close to market close. So market closed at 2 p.m., which was right here. So at this point, market's closed. I'm not going to take any more trades for that day. So what we're going to do now is we're just going to wait for the next day again. Cammy's asking, what tool are you using to calculate the stop loss and TP? So to calculate the stop loss and TP, I use this tool right here. If you go over to the left panel, it's under the prediction and measurements tool. And then depending if you're taking a long position or a short position, you'll just choose one of these. Right here, we took a short position. So I'll just click the short positioning tool. You'll go at the, so I'll just line it up how it is right here. So at the close of this candle, but I'm gonna put it out here. You'll just click on that just to place it. And then it'll place it at the previous swing right here. So this is calculating the previous swing at this current price. But what we're gonna do is we're gonna move it to the swing, which is right here. So this is the correct swing. It's only 1,000 pips. So like I said, we're gonna change that to 1,500. And then pretty much once you click, you just need to double click on it. And then the parameters will open right here. So right here, it shows that the stop loss is at 1,033 pips. So we're just going to change that to 1,500, which is the minimum. And then you click OK. And then it's pretty much set. It's easy as that. Let's see, Josh is asking, what broker do I use to trade US 30? Me personally, I use Hugo's Way. I just use Hugo's way because it's the easiest thing. And you know, it's pretty simple, especially if you're only trading one thing on there. I only trade US 30 on there, so I don't really have to worry about anything else. But I use that broker only for US 30, and it's only because US brokers don't offer US 30. Well, some US brokers do, like TD Ameritrade, but Forex.com doesn't provide it. And if you're trading it on TD Ameritrade, it costs a little bit more because it's, you know, it's the actual index. It's not in pip form like how it is on Hugo's way. But yeah, let's see if there's any other questions before I move on. I think that's about it for now. So we'll keep moving forward. So we covered Tuesday, which was 5/12/2020. Now we're going to move on to 5/13, which was Wednesday. So let's skip through the rest of the day. All right, cool. So right here, 6 o'clock. Let's keep moving a little further. All right, cool. So right here is 6:30. This is the New York Stock Exchange open on May 13th, 2020, which was Wednesday. Let's run through it. So right here, requirement number 1, we start at 6:30 a.m., which we did, which was right here. This is when the New York Stock Exchange opened. Next, we want to identify the first K2 signal. So right here, we have a sell signal that happened previously. The next signal is going to be a buy. So let's see the momentum swing upwards. I'm not even sure if it, okay, so right here. Let's keep moving this along. All right, so right here, we got a buy signal. So this is the first signal following the market open. So if we follow these requirements, I'll just rewind back to this area. All right, so following the requirements, we started at 6:30. We identified the first K2 signal right here, which was a buy. And then we entered on the close of candle. So we'll enter a buy right here. And then the stop loss is placed right here at 1400. We're gonna push that back a little bit to 1500. I think this was a loss. I think this was a loss because there was news yesterday. There was the Fed spoke, and you know, it caused price to drop crazy like it did right here. And this was my mistake because I thought price was going to correct back upwards. But you know, seeing a move like this following the morning open, obviously price is going to keep moving in this direction. But unfortunately, you know, I decided to take it, which is fine because we are already up 4,500 pips for the week. But let's run through it anyways, just to show you guys. So you can see right there, it's stop loss, which is fine because we were still up. So let me just add that there. I'm just going to show you guys full transparency. You know, not every strategy is going to hit 100% of the time. So this just goes to show that, you know, sometimes if you use the proper strategy that has a good win percentage and works properly, you'll see at the end of the week that it'll add up. All right, so for that'd be our first loss for the week, which was yesterday AM. And then if we wanted to take the next one, so okay, so this was the AM trade, and then if we wanted to take the next one, which was the 1031. So like I said, same requirements. We just start at 1030 for the PM trade. So 1030 was right here, and then we're going to look for the next candle. So right here, this isn't a valid signal because it is a sell signal, but the candle is bullish. We need to be bearish for it to be valid. So we're going to skip this. And the problem with this right here, although this is a valid signal, it's at 1240. So from 1240 on, the market closes at 2. So we only have X amount of time for us to exit this trade. So right here at 2:30, this is when market closes. So this makes it a little dangerous because time is, you know, the market's about to close. But let's just let's place it anyways just to see if it plays out. I don't remember if I saw this during that day, but let's check it out. Okay, so the previous swing was right here, which was 1,300 pips. So we're gonna round it to 1,500, like I said, because that's just a little too close. All right, cool. So if we place this right here and then we let it run, you can see right there, it hit profit target. So if you take both entries, the AM and the PM entry, it would have canceled itself out. So we had that loss in the morning, but if we took the PM trade, it would have covered it. So let's change this to, so basically if we add all this up right now, or we're completely in profit because this canceled out that loss from earlier. So I'll just split these up by days just so you can, so you guys can see. All right, cool. So there we go for that day. Let's see, D. Thomas said, so would you consider news in addition to the indicator? Yeah, so generally if there's high impact US news in the morning, or something that would affect the US 30, then pretty much what I would do is, depending on the time of the news, so let me pull up my news tab over here. So depending on the news and how high impact the news is, so on Monday we had no news, and that's why I took the trade. It was fine. On Tuesday we did have news at 5:30, so our entry started at 6:30, which was fine. I don't think, looking back at the chart, it doesn't look like there was anything heavy on was it 12. Right, yeah, so I would kind of analyze it just to see, if market's been manipulated due to the news. So right here, news was at 5:30, and then I'd look at the chart at 5:30, and I would focus on 5:30 and the open. So as you can see right here at 5:30, there wasn't really much that happened. There wasn't like any crazy candles or any gaps or anything. So this would be clear to me that this is fine to enter the strategy. However, if I didn't feel comfortable taking this trade at this time, I would just wait for the PM trade, because the PM trade's at 10:30 a.m. So that's enough time between 5:30 and 10:30 to determine whether price has already been manipulated, or if it's it's done moving due to the news. Next, on Wednesday, we did have news. This is what I was discussing earlier. So the news was at 6 a.m. and this was my mistake, because I should have just skipped this day because it was so close to market open. And the Fed spoke, Federal Chair Powell. So he spoke at 6 a.m. I think his speech went until 7 a.m. It started at 6 a.m. and it probably went until 7 a.m. So we probably should have just skipped this day, taking the US 30 trade, because as you can see it from 6 a.m. on Wednesday, which is right here. So once 6 a.m. hit right here, you can see a huge candle. So you can tell that affected the market heavy. So in this situation, I probably should have just avoided this trade, honestly, and then waited for the PM trade. So if we avoided this trade, we would have skipped this loss, and then we would have had the PM trade win. So it's case by case basis. It's not always going to be textbook whether you take the trade or not. But what I would do is, if it was heavy news like it was on that Wednesday, if it was high impact and it's something that clearly would affect the US 30 or any type of indice, then I would avoid it. But we were on such a hot streak, so if we counted this week with the previous week there was no losses. So we had like a 6-win streak continuing to Tuesday, and that's kind of why I was a bit excited and I wanted to take it anyways, because it's been hitting every single day. But if I use my brain and didn't think about taking this trade, then we would have been fine. Or also, if stop loss was moved just a little bit lower, we probably could have survived this trade and made it into this one. But you win some and you lose some. The thing is, if you exercise proper risk management, you should be fine. But yeah, you can take that by case basis. It's never going to be a for sure answer whether you're going to be skipping the trade or not. But personally, I think if I paid more attention to how price is moving, I probably shouldn't have taken this trade, but it's okay. Since we took the PM trade after, then it just canceled itself out. So it's like we didn't lose anything that day. Okay, so now we're going to go to the 14th, which is today. So let's keep moving forward. 13th. Okay, so we're now on the 14th. We're looking for 6:30 so that we can take the next one. Yeah, see, the Fed spoke again today. So this day might have been a day to skip the trade, but we did take it. Okay, so let me go back to 6:30 right here. All right, so back to the requirements. Requirement 1, we start at 6:30 a.m. Next, we identify the first K2 signal. So right here is 6:30 a.m. See, this kind of pointed out that there was going to be some manipulation or something happening within the first couple hours, if not the entire morning, because this is a huge wick right here. So price shot up. I was watching this live. Price shot up literally 1,000 pips and then shot straight back down. So this should have told me not to take any trades, but we still took it anyways. So that was 6:30. We're now looking for the next K2 signal, which was right here. Okay. So right here was the first signal after market open. So requirement 1's met, requirement 2's met. Next, we enter on the close of the following candle. So once this closed right here, we'd enter a buy. We'd put our stop loss down to the previous swing, which is down here, which is about 2,875. And like I said, I like to trade at intervals of 500. So I'm going to just round that up to 3,000. There we go. And then we'll let it run. And then it hit TP right there. So if you took that trade today, you would have made 3,000 pips off that. So I'll just add that to there. 5:14 a.m. plus 3,000 pips. And then we took another one after, which was 3:14:20 p.m. And then let me show you guys that right now. Okay, cool. So for that next entry, the PM entry, we're waiting for 10:30 to hit, which was right here. So this is 10:30. The next candle was right here for a sell signal. So requirements are met. Instead of 6:30, we waited for 10:30. We identified the first K2 signal, which is right here. And then we entered on the close of the candle. So right here, we entered a sell at the close of this candle. And then we moved the stop loss to the previous swing, which is 1,300. We're going to move that to the minimum of 1,500. And this did hit stop loss, but the thing is we had a TP1 around the middle. So some people got out, including myself, because I knew that the market was already being manipulated at this time. You can see this crazy movement. This isn't normal movement. If you go over here, price moves pretty steady. Like it moves a couple, let's see, during this entire period, it only moved like 2,000 pips. But if you look at the market on today, this was moving like 3,000, 5,000 pips. So from right here, 7 a.m. until lunchtime, which is not very much time, it's 3 hours, it moves 7,000 pips. So this is a huge difference compared to normal movement in the market. So this was probably my bad well, not really my bad because we still won this trade halfway. So right here, I'll let it run. And as you can see, it came down right here. This is where our TP1 was. It literally kissed the TP1 and then reversed. So what happened when it hit TP1, a lot of us just exited because people are getting scared with the market moving so crazy. And as you can see here, price is moving pretty crazy. So within those few minutes, it moved 2,000, close to 3,000 pips within an hour, which is insane for US 30. So a lot of us exited here. I'm gonna count this as a loss just to be transparent with you guys. I'm not trying to fluff the results. Like I want to show you guys what's legit here. So there's 1,500 pips for a loss. And then the total for this week, if you add everything together so far, so let me get my calculator out. So if all you did was take 1 or 2 US30 trades this week, you would have made, so 1,500 plus 1,500 plus 1,500 minus 1,500 plus 1,500 plus 3,000 minus 1,500. So in total, for this week, you could have made 6,000 pips just trading US30, just once or twice a day. Total is plus, what was it, 6,000? Okay, yeah. So plus 6,000 pips. So if you're trading with a broker that values US30, dollar per pip, you could have made 6,000 this week just trading US30, nothing else. If you're trading on Hugo's Way or another broker that's common, which is probably going to be around, I think it's 75 cents per pip. Let's do the math real quick just so you guys can see. So 6,000 times 75 cents. You still would have locked in $4,500 with a couple trades. Is that right? 4,500. Yeah, I think it was 4,500. So 4,500. Sorry, it's not pips. USD. 1,000 USD. Which is not that bad. So if you took, let's see, 1, 2, 3, 4, 5, 6, 7 trades for this entire week, you could have locked in somewhere between $4,500 and $6,000 just trading one of these a day, a 1 or 2 a day. So if you're trading the AM and the PM, or one or the other, you just take half of that off. Candice is asking, which broker offers $1 per pip? I think it's AvaTrade. I'm not too familiar because they don't accept US clients. I know a lot of the European clients, they use AvaTrade, and Wade, who is the indices expert in K2, that's what he recommends. But they don't accept US clients, so I'm not familiar with them at all. But I think with them, it's $1 per pip. I know for Hugo's Way, it's somewhere between 50 cents and 75 cents per pip. I think on the last webinar, someone confirmed that it was 75 cents. So that's pretty much what's possible if you use my K2 Daily US30 strategy. So let's see, D. Thomas said, do you normally stick to the 10-minute chart? For this specific strategy, I only trade this on the 10-minute chart. For Forex or any longer term trades, I trade on the 4-hour right now due to the current market conditions. Because as you can see, price has been spiking around all over the place. So if you're trading on anything lower than that, that's not US30, then you're going to see a lot of noise. The thing with US30 is if you're only trading during the stock market open and close, between that time period, there's going to be a lot of volatility during that time. So you're going to be able to catch these momentum swings in these specific directions. Like as you can see here, like right here, we took these trades and there's clear direction being set. But during midday, it's just moving sideways. So like right here, this is what time it is right now. So right now, it just moves sideways until there's movement again. So this was like London breakout. And this is pretty much like where you don't want to be trading, unless you're trading something that you're trading an instrument that works better when it's consolidating, like options or binary options, something like that. Then it'd be a good time to trade when the market's going sideways. But you pretty much want to catch the market when it's actually moving. And there's like some sort of direction that's being set, especially if you have the K2 indicators, because the K2 indicators indicate momentum. So if you tie volatility with momentum, you're pretty much golden, because then you're going to be able to follow signals that way. Let me see what else we got here. John Harris is asking, after you hit TP on the 30 and the trend is still going strong, will you jump in or do you leave it alone? Personally, I leave it alone because if you end up chasing trades, it's not really going to end well for you long term, because when you chase trades and you're just trying to re-enter because you're trying to maximize your profits, when you do that, you end up over trading. And when you overtrade, that turns into revenge trading, because if you lost a trade, like say right here, if you lost this trade and then you wanted to keep making back, you know, odds are you're probably just going to keep stacking losses. And what you really want to do is you want to master risk management, because the thing is, like with the strategy, you only take a few trades a day. So, you know, it's low stress, and risk management is pretty on point, because, you know, you either win something one day or you lose something one day. And the thing is, with the type of results that this strategy produces, it's a very high win percentage strategy. As you can see here, there were only 2 losses. So let's see, 1, 2, 3, 4, 5. So 5 out of 1, 2, 3, 4, 5. So 5 out of 7 trades. Yeah. So 5 out of 7. It's 71%. Yeah, 71 to 72% win percentage, which is pretty high. And last week it was straight win. So if you want to add that into there too. So let's see. So we have 5 plus 6, so it was like 11 divided by. So we got 7 here. 6. Sorry guys, my math sucks, but let's see. Okay, so we had 7 this week plus 6 last week, so 13. So 11 divided by 13. So if you combine last week, so if we're combining the entire month of May, last week and this week, it'd be a 84 or actually 85% win percentage off the strategy, just taking, you know, a few trades a day. So the thing is, if you're just trading this specifically, then it's definitely going to help with your win percentage and pretty much prevent you from over trading. Because the thing is, if you scalp, if you use my scalping strategy, that works pretty well too. But the thing is, if you're taking too many trades, say if you scalp a couple and you make a couple, you know, $100 here and there, and then you take one big loss that, you know, pretty much wipes out all your profit. If you take another trade, because odds are if you lose all of your profit from scalping, and then you want to go ahead and make that all back in your revenge trade, if you stack up those 2 losses and your win percentage isn't as high as it is taking, you know, 1 or 2 trades a day, then you're going to end up in the negative. And I think that's the main key with a lot of new traders. A lot of new traders don't know how to control emotions or pretty much, you know, control the risk management. Because when you're scalping, you're going to be, your risk reward is going to be high. You know, obviously it's going to be like a 1 to 2. I mean, like a 2 to 1 or like a 3 to 1. So, I mean, I hope that answers your question. Where like if you do hit TP, you should just leave it alone. Pretty much that's what I do. But like I said, you can always re-enter it. Let me see. I think for today's trade, there was something that came up. Oh yeah, okay. So for this one right here, I know I was talking to you earlier, John. We were DMing when we were talking about that trade. But what I did right here, I actually went against what I just explained, and it was only because I knew that it was going to come back down, just from looking at how price was moving. So what happened right here was, I think if you guys were following my messages, I gave you guys the signal, and price dropped. So price dropped pretty far. It dropped right here, right down there. So as you can see, so if you guys look at it closely, you can see price dropped pretty heavy, and then it pulled back. So right there, it dropped. So once it dropped down here, which was about 500 pips, 600 pips. So yeah, once it dropped 600 pips, what I did was I moved my stop loss to 500 pips. So as it retraced back, it stopped me out in profit. But then once it pulled back right here, once that happened, you know, this is going to come with experience and just skill from, you know, trading this every day. You're going to be able to spot patterns. So I saw this spike up like that, and then it spiked up right here, but I knew that this move wasn't done yet. And I'm basing this move off this because, you know, the strategy worked so well right here. There was no drawdown. I figured it was going to come back down. So what happened right here was, once it pulled back, I put a sell stop right here at the entry so I could re-enter. And then I re-enter right there when it came down. So at this point, I came down, and then what I was aiming for was TP1, which was somewhere around here for 750 pips. So I caught that down, and as you can see, it came back down right there. And this is when me and you exited, John. I remember we both exited at TP1. So we exited right here, and then we locked in these profits. So I pretty much hit the full TP because I caught about 500 pips here, and then I caught another 750 pips right here. So I got close enough to, you know, getting full TP, and then I got out. At this point, I wouldn't re-enter. You know, you could probably double dip once, but double dipping more than once is that's like super risky. So at that point, I wouldn't double dip. But yeah, if you feel and you feel confident that, you know, the trade's going to come back down, especially because you saw this right here, straight, like a straight shot up, then you could double dip once, but I wouldn't double dip a third time. I wouldn't triple dip, because as you can see right here, if you got stopped out right here, there's a couple people in the group that ended up trying to re-enter after this point. And then as you can see right here, it reversed completely. And that's why you don't triple dip. I wouldn't even recommend double dipping, but I mean, if you feel really confident, then yeah, go ahead and take that double chance to, you know, make a little more profit. But as you can see right here, if you got greedy and you wanted to enter again a third time, you would have lost all that profit that you just made right here. So it's not really worth it, you know. It's better to just take as like whatever profit you can get and then move on to the next day, because if you don't lose, then there's no way you can blow your account. You know, it's all about risk management. You just stack those little profits, and then at the end of the week, you know, add up to something nice. Like right here, you know, it's 1,500 pips. Even if we didn't take, you know, these other trades. So if we skipped the PM trades and we just took this one, so this is 1, 2, and then count this as a loss if we didn't take the afternoon one. And then we took the morning one right here for 3,000 pips, you'd still be pretty heavy in profit. And it's all about, you know, growing your account and conserving your capital when it's time to use. So yeah, hope that answered your question. But personally, yeah, back to your question, I would just leave it alone. All right, let's see what else we got here. So Bobby's asking, is 4-hour candle close to any FX signals? Yeah, Bobby. So let me check the FX pairs real quick. Hold on, let me just answer this one more question. I just want to see what else we got here. So Cammy's asking, I don't have 10 minutes. Can I use 15 minutes? Do you not have 10 minutes because of your TradingView plan, or because you don't know how to set the 10 minutes? Because a lot of people don't know how to set the 10 minutes. All you have to do is click on the chart, and then you type in 1, 0. So you type in 1 and then 0, and you'll have 10 minutes there. A lot of people don't realize that you can just change the time frames like that. I know if you have the free account, you're not going to be able to change it, depending on which account you have. Another way to do it is you'll click on the time frame thing right here, and then you'll go down here. I know you guys, most people don't have this 10 minutes here, but what you do is you'll just go down here, type in 10 minutes, and then you'll add it to your time frames. So depending on what type of account you have, you should be able to do it. I'm just not sure if you can do it on the free account. So that might be an issue. If that's the issue, I would go on the 5-minute, because I've tested this on the 5-minute and it works just as well, just not as accurately. So so like right here, you probably could have entered this, but then it would have gave you an early signal. So the problem when you're trading on the 5-minute chart is that your minimum is not going to be as big, because the 5-minute candles move a lot smaller than the 10-minute candle. So the 10-minute candles, I have the minimum at 1,500. But let's see how far is the swing here. Actually, the swing here is pretty wide. The swing was 1,700 pips. So if you were to enter this, looks like it dropped down to, I think, 1,200 pips right here. Yeah, so the previous swing would be at 1,700. It looks like it dropped down about 1,200 pips. So you probably would have hit TP1 right here and then exited, or, you know, at least move your stop loss and profit. What I always recommend is once you hit TP1, which is around the middle, you at least move your stop loss to break even. So if it ends up reversing on you, then you still make at least some profit, or you get out break even. You know, if you don't take a loss, and that's better than taking a full-on loss. And then if you got stopped out right there, you could re-enter on this trade right here. But the strategy works on the 5-minute as well. It just isn't as accurate. That's going to be the main gripe about this. So let me see if there's another one over here. Okay, so like right here, like I said, the 5-minute chart, we started at 6:30, which is right here. This is the 6:30 candle. This is when the stock market opened. We take the next signal that is active. So right here would be invalid because it's a buy signal, but it's a bearish candle. So we'd skip this signal right here, but then we end up taking this one right here. So this is going to be the first entry. And what we're going to do is we're going to enter a sell on the close of that candle. And then the previous swing is right here for about 1,000. But like I said, you could either put it at that swing or you can put it to the minimum that we do on the 10-minute. But it's, you know, it's going to vary. The results aren't going to be as good as the 10, but it's still going to be pretty accurate. So right here, if you took that trade, another winner right there. And then if you wanted to apply it again on the 10:30, so right here is the 10:30 candle. And then what we're going to do here is we're going to look for the next entry, next signal candle, which is right here. So we have a sell signal. We're going to enter a sell right there on the close of the candle. We're going to put it at the previous swing, which is right here, which is 1,200. And then if you want to put it to 1,500, it looks like it barely missed it. Oh no, actually hit it. So so on the 13th, if you ran this on the 5-minute chart, you know, 6:30 in the morning entry would be right here. You'd make 1,500 pips, and then again right here at the PM entry, you would have made another 1,500 pips because it looks like TP actually hit right there. So you can apply this on the 5-minute and the 10-minute. I don't recommend using it on the 15-minute. The problem with the 15-minute is that there's so much time in between each candle that you're gonna miss the entry. Like the entry is either gonna come a little too late or a little too early, but it's not gonna be on point. I've only back tested it on the 5-minute and the 10-minute, so those are the only two that I'll recommend. But you can always just go on the 15-minute and find out yourself. So we could just check real quick before I move on. But let's see. So I'm just gonna delete all this stuff on here. You know, maybe it works good on the 15-minute. I've never back tested it, so I can't really say. That's why I'm not going to give you, you know, advice to take it at that time. But maybe it works. So right here is 6:30. This is going to be the next signal right here. So you might be onto something right here. Put it the previous swing, which is right here for 2,600. I'll round that to 2,700. So yeah, on that AM entry, we're locked in 2,700 pips. Again, if we take the PM entry, which was right here, so right here was 10:30. This is an invalid signal, so we're going to take this next one right here, which is a buy signal. Enter that right there with the stop loss at the previous swing, which is about 2,400 pips. So we'll just round that to 2,400. And then let it run. And then if you took that trade today, you'd still be in it right now. Let's just go one more day behind, just so we can, you know, run through it and you guys can be familiar with it. So again, on the 13th right here, we are going to wait for the 6:30. So 6:30 is right here. Stock market just opened. This is not a valid signal because it's a buy signal with a bearish candle. Right here is a sell signal with a bearish candle. So this is valid. We enter sell on the close of that candle. Previous swing is somewhere up here. See, the problem also, this is one reason why I don't trade on 15, is that the margins are going to be a lot wider. So normally, you know, we're placing our stop loss and TP at, you know, 1,500, 2,000, 2,500 pips. Right here, they're going to go up to like 3,000. This is kind of a lot for most people. Like they're not going to be able to survive this drawdown or hold a trade for this long. So the thing is, although this hit, you know, a lot of people aren't going to be willing to put a 3,500 pip stop loss because that's a crazy drawdown for most people. You know, the minimum to trade indices is 1,000. This is going to surpass that limit, depending on your broker. So if you don't have enough money to, you know, take this trade, a lot of people aren't going to look on the 15-minute. But if you're able to, it looks like it's actually really accurate. So right here, this would have been a win. for 1,500, 3,500 pips. And then if we tried to enter at 10:30, so this is 10:30 right here, this candle. Let's see if it. So this signal came at market close. We wouldn't have taken this entry. So actually, I mean, if you can handle the 15-minute, the margins that are required for the risk, then it looks like it works. I might even look at it myself, but the 10-minute works perfectly fine for me, and that's why I'm probably going to keep using that. But yeah, I'm probably going to go and back test this myself, because if this does work, then maybe I'll be using this for future signals. So right here again, 6:30, enter this trade. I'm just going to go through it really quick. I'm not going to break it down for you guys because it's the same thing every time. Another winner right there. Wait for 10:30 over here. You wouldn't have taken this trade. This is already nighttime. It's already like 5 p.m. For the 11th real quick. All right, so 6:30 was right here. We got a buy signal right here. Actually, this is very accurate. So this might be a good alternative for you if you can't get on the 10-minute. So previous swing is right here. We're gonna round that to 1,500 because 1,000 is too tight. Right there, another winner. 10:30 hit right here. Wow, yeah, this is really accurate. I just never bothered looking on the 15-minute because the spread was just way too high. Yeah, John said 3,500 pips will tear you up in US 30. Yeah, definitely. That's way too risky for me, and that's probably why this is why I don't look on the higher time frames. But just looking at this, it's very accurate. So maybe I might try it at some point. I might just run signals for all 3 time frames, and whatever comes first, then I'll probably take that one. But again, right here at 10:30, you want to take the PM entry. So there's 10:30. Next signal right here is a sell signal. It's valid because it's a sell signal, bearish candle. And then if you enter this right here, 1,500. Round that up. And then there you go, another winner. So it looks like there's no losses with the 15-minute. This might be the next move. Okay, right here, 6:30 is right here. Next candle, this is invalid. We would have taken this one right here. It would have been a loss. So it looks like it has pretty much the same win percentage as the 10-minute. It's just there's a lot more risk involved because there's a lot more pips that she'll be risking. Oh, actually, no, this was on Friday. So I probably wouldn't have taken this trade because it already hit. It hit at. So this entry would have came at 10:45, and once it hits Friday, once it reaches a certain time, like 9 a.m., I don't enter any more trades because you don't want to get stuck in this trade over the weekend, because if you hold on to this over the weekend, I mean you could end up with your account going through slippage, and it'll just pass through your stop loss, and you'll end up having an account blown on market open the week after. So yeah, personally, I wouldn't take any trades on Friday that are that late. So the 8th, we would have skipped that. The 7th, I'll just look at one more just to see how accurate this is. All right, so 6:30 is right here. This is the first signal. Looks like it would have been a loss. So give or take, I mean, it's a good strategy as well. So stop loss was right here. Yeah, I would have hit stop loss. I mean, it has good results too. Technically, this strategy works on all time frames. It's just what I find it to work best on is the 10-minute, because I've done it on the 5-minute and it works fine, but there's a lot of noise on the 5-minute. So I prefer the 10-minute, which is a good sweet spot in between. Let's see if there's any other questions real quick. D. Thomas, if by any chance could use a strategy on other pairs, or did you develop the strategy specifically for US 30? So this strategy is just for US 30. If you've seen the original K2 strategy, then it's something similar to this, except here, let me just, I'll show you. So the original K2 strategy, what we do is we just match this up. I'm not sure if D. Thomas is familiar with the K2 strategy, but yeah, if you're familiar with the K2 strategy, basically what you do is you line up the momentum signal with the overall trend. So right here we have a buy signal, and then if you're not familiar with the K2 indicators, I'll just go over them real quick. The bottom indicator right here shows you the overall trend on 4 different time frames. So the trend meter, you can set it to 30-minute. I have it set to the intraday settings, which is 30-minute, 1 hour, 2 hour, and 4 hours, which will show you the overall trend for the day. If you want to scalp, you can go on the lower time frames. If you want to swing trade, you can go on the higher time frames. But pretty much what this meter does down here is it shows you the overall trend. So when it's green, it tells you that the overall trend is trending upwards. If it's red, it tells you that the overall trend is trending downwards. And then when it's blue, this demonstrates that trend is neutral at the time. So applying the original strategy, you pretty much just have to match the color. So if it's green and green, you enter a buy on the close of that candle. So it closed right here. And then you move your stop loss to the previous swing. This is way too close right here, 800. The only reason I know that it's too close is because US 30 moves a lot faster than Forex pairs. So if you do that, using the same exact strategy as I discussed earlier, I would move it to sweet spots like 1500 pips. Right there, it would have been a win. And then you could enter this one again right here, another buy entry. And pretty much the same thing, 1500 pips. So those are both 2 winners right there, back to back. And when I trade on intraday, I trade on the 30-minute. And then again right here for some sells. So if you match red with red, this tells you that momentum swinging downwards, and then the trend is moving downwards as well. So obviously you only want to take sell trades in this within this zone. So you enter right there, and then there you go, another winner for about 3,500 pips nearly. And that's pretty simple. But yeah, going back to the 10-minute strategy, that was developed only for US 30. The reason why it's on the 10-minute is because we're only trading within a tight time frame. We're trading during the US stock market open. So we're only trading between 6:30 and 2 o'clock, right, 14. So this is why we only trade we trade on the 10-minute, because the 10-minute gives you enough space in between candles to catch moves and momentum. If you go on the 30-minute, obviously it's not going to give you much space for you to make any entries. It's only going to give you this many candles to catch a signal. Odds are you're probably not going to catch a signal during that time. Same with the 15-minute. So you can catch one signal, but it's not guaranteed that you're going to get a signal within that time period. Right here, there's a gap, no signals. There's a gap here, no signals right here. So the thing is, if you go on the higher time frames, you're probably not going to catch a move during that short time period. But if you go on the 10-minute, it gives you 2 entries right here. If you go on the 5-minute, it gives you even more entries right here. You can take, catch X amount of trades within this time period. And this is why I stick to the shorter time frames and on US 30. Also, US 30 moves a lot faster compared to FX pairs. So the thing with US 30 is you're able to catch this move because the stock market's moving so fast within market open to market close. The thing with if you're trading FX, so let me go to FX real quick. Just gonna go to a random FX pair. Let's go to like a popular US pair, like Euro USD. Let me just move this over. Actually, let me go to one that's not marked up because there's just too much stuff going on in this chart. All right, so if we go to GU, personally, I haven't tested it on here, but let's say if you wanted to trade during, so the US market opens at 6:30, so right here, is 6:30. Yeah, it doesn't look like it works pretty well. So look right here, the market opened for the New York Stock Exchange, came down, and then right here was the first signal, which was at around 11, and it would have hit stop loss, it looks like. Let's see how many pips is that. Yeah, it's only 8 pips. So it doesn't look like it would work on here. The problem with this is because Forex doesn't move the same way indices move. The indices for indices, there's like a there's a set time where you're going to find high volatility. The thing with Forex pairs is that they can be volatile at any time of the day. Like right here, they're obviously volatile during US Open, but there's no specific time period where there's a huge amount of people that are trading it. Obviously, there's going to be higher volatility during London. So the problem with GU too is because it would be hard to base the trade off London Open or US Open because the US follows London Open. So the real volatility happens during London actually. So maybe if we start from midnight, we can find a better entry. So right here was midnight. It doesn't look like it worked well here either. It probably does work. Honestly, I just haven't tested it. The thing is, it's probably not going to work best on the 10-minute, maybe on a higher time frame, due to the type of asset. Because like I said, the Forex pairs move totally different from indices, and that specific strategy was based off indices only. I think that's about it. So let's see. I'm just gonna look for one more to see if there's anything good here that could have played out. Let's start from the 11. All right, so midnight was right here. This is midnight London Open on Monday, I believe. This is an invalid signal, and then this is a valid signal. So maybe it would work. I just haven't tested it, so I can't give you my confirmation that it actually works, but it looks like it could possibly work. But then again, right here, see during the New York Open, you'd expect price to be highly volatile like it is during London. But as you can see right here, it was just pretty much consolidating during US session. It's not like US 30 where it's moving, directional, and the exact time when it's moving directional where you can take the trade so you'll have an edge. But you can see right here, the New York session just opened and it literally just went sideways. And that's why I wouldn't apply it on FX pairs. All right, let me keep going down real quick. Oh, sorry, I totally missed the other question earlier from Bobby. Bobby was asking if there's any Forex signals on the 4-hour. Personally, I'm not going to take any because due to the market conditions, but I'll just look real quick and I'll give you any ideas that I see coming up. But personally, I probably would just skip the rest of the entries this week because just the way the market's been moving this week, it's not really worth the risk. So let's see. This is OddCAD. Let's see about the chart. This. All right, so OddCAD is consolidating. I wouldn't take that trade. We still have this trade that's been active since the 6th. I know a lot of people exited once it reached TP1, which was way over here. But if people are still in this, I recommend getting out once it goes back in profit. So nothing for OddCAD. I'll just zoom through these real quick. If I do see something, maybe I'll call it. But personally, just the way the market's been moving, I personally wouldn't take any trades right now. So right here for OddCHF, rejection, rejection, rejection. We did get a buy signal right here. A low was established right here. So, I mean, this possibly might come up a little more, but like how the market's been moving this whole week, it's been just reversing after the signal. So possibly, this could possibly shoot up to to this resistance up here. If it doesn't shoot up to this resistance, it'll probably reject for a double top and then come down. But then again, you know, there's no guarantee that it's going to move in that direction. So the market's just been really weird. So if you want to take Forex pairs right now, it would be super high risk. Let's see what else we got here. Let me just zoom through these real quick, and I'll go back to the questions. So yeah, for odd CHF, there's a possibility that it might shoot up, possibility that it might come down, because we did get that buy signal. But like I said, price has been reversing like this whole entire week. So although it's in a short-term downtrend, price could either come down or it could go up. It's too indecisive for odd CHF. I wouldn't take that trade right now. For odd JPY, it looks like it's the same difference here. Personally, I would stay away from all AUD pairs. They were super manipulated this entire week. You can see right here, we got a sell signal. It reversed directly up, but then it came back down. That's kind of what's been happening this entire week. Same with odd JPY. Looks like we got a buy signal here, but it looks like it might be coming down actually, because we have a 1, 2, 3 triple top up here, and then it's a short-term downtrend. So odd JPY might be a good sell. We were in this trade earlier. It did get stopped out, you know, for whatever reason. It was down here when we entered. We actually entered on this right here yesterday, and we were in profit pretty decent. But then it just had a strong reversal, which, you know, honestly, I don't know where this came from, because JPY was strong all week, and the Australian dollar wasn't strong at all. So I'm not sure, you know, what caused the spike up. But market's been weird. So if you do take this trade, it looks like it's a sell bias. But then again, you know, we can't really be sure due to how the market was moving this week. Odd NZD is just consolidating. We didn't even look at that. Odd USD. Actually, all of these pairs have the same exact pattern. They all, like, look at odd USD, the double top, and it looks like it's in a short-term downtrend. Same with odd JPY. It's the same exact pattern, double top, short-term downtrend. So you might want to take a sell, but the problem is it might reverse on you. So honestly, it's very risky to take any Forex trades right now. CAD CHF, let's see. We do have a buy signal right here, but it hasn't closed. I think if it does close with a bullish candle, then it might shoot on upwards. Reason for that is because we have a strong support right here where price has rejected off 3 times, 1, 2, 3 for a triple bottom. So if we do get that momentum swing upwards, then it might come on up. But the problem with that is that there's a resistance right here, which is a little too close. It's only 13 pips away. So what might happen is it might, even if it does shoot up, it might reject off there and come back down. Risky trade. KJPY. It's similar to all the other JPY pairs. Like I said, JPY was strong this week. You can see right here we got a sell signal, and it came down pretty heavily. But then randomly, the JPY shot up like random. There was no news, no nothing that caused it to shoot up. Especially with all the coronavirus news going on in the world, you'd expect JPY to be strong because you know, the yen is the Japanese yen is a what's it called, safe haven currency. So you'd expect it to be strong, but you know, I don't know where this movement came up, and this was a strong spike up. So from down here up to there, 100 pip move within not very much time. So yeah, from 6 a.m. it's only been, what, 12 hours since then. Maybe less because of the previous candle. So myself personally, I'm going to be staying out of Forex trades for probably the rest of the week, just because it's just too risky. You don't have an edge right now. Unless you have an edge, then yeah, take the trade. but it doesn't seem like anyone really has an edge right now. I've followed up with other people who trade, like other trading companies, and no one's really doing well right now. So I would conserve your capital for next week. So I think next week we'll just bounce back real quick, like we normally do. So right here, EA. This was an idea that I posted yesterday. It's like went in profit pretty decent. So right here was the entry. Went in profit about 100 pips. The reason why I didn't call this was because the risk reward was way too wide. 200 pips. Even if I posted this, majority of people wouldn't even take this trade. And the problem with that is because, as you can see right here, it filled the order, and it went in profit about 60 pips. And then it reversed like 100 pips. So although this pair would have been a good pair to trade, you can see like you're not going to be able to survive any drawdown in this trade unless you can have wide stop loss, and most people aren't able to survive that. Your cat, this was an idea that I gave yesterday too. So I gave this idea. So we had this trade active. This was one of our trades. This hit TP. This was an idea that I gave on the 11th. This is following the normal 4-hour strategy. Shot on upwards. I lined this up right here. I think I posted this in the group as an idea too, but it doesn't look like it really moved very much. So if you do want to take odd CAD, you can Euro CAD, you can take it for a sell. But like I said, market's being manipulated this week, so it just might be a little too risky for you to enter. Let's see. Let's see how much it moved down just to see how much. It didn't even move down that much. It moved down 24 pips, which I mean, it's not bad, but it's also not really worth a move unless you're going to be scalping it for like 10, 15 pips. Here's CHF. Yeah, like I said, it's weird. This was a strong reversal up. Normally, if price was moving normally, it seems like it would have came down after it broke down here, but then it reversed on upwards. So it came down 4 pips and then it reversed up 8 pips. Oh, and Dion says that there's Euro news in about 4 hours. So yeah, on top of that, market's been weird. Plus there's Euro news in 4 hours. I probably wouldn't take any trades right now, because the problem with that is you're going to be stuck in a trade. And then once the 4 hours comes and the news is released, and if you're in negative, you're not going to want to exit that trade. You want to hang on to it. And if that news highly affects the market, which it probably will, let me check what the news is for that. Yeah, it's high impact Euro news for the German preliminary GDP. This is probably going to affect the market. So because the GDP is probably going to be low, yeah, it's forecasted at negative 2.2. So you can expect the Euro to be weak. So if you were taking this, actually this might come back down. It might come back down if the Euro is weak, but like I said, this area right here, it gapped up for whatever reason. There was no Japanese news. There was nothing that would cause this to gap up. You would think that it would move opposite because the coronavirus news got released. The U.S. dollar was weak, but technically the U.S. dollar should be weak, but it was in strength today. Same with the Japanese yen. It should be strong, but it was weak today. So fundamentals just don't play out as they should. So I don't really see any good entries. This again right here, Euro NZD. This would have been a good entry right here. Maybe if you want to take a late entry, it could still be valid, but it's just way too risky. It's not something that I would take, and that's why I wouldn't be posting it as a signal. So I wouldn't be posting any personal signals right now. I'm personally avoiding GBP. You can see right here, it's just moving sideways. Let's see GC real quick. GCAD, it's moving down, but who knows for how long? Just like with the other pairs, this can reverse at any moment. GPCHF doesn't really look that good. This is the GJ call that I called yesterday. It looks like it's still in profit if you guys took this. But personally, I wouldn't enter right now, especially with that random bullish movement. Although it looks like it's correcting back downwards. Usually during London Open, there's been a lot of manipulation where price would just reverse pretty hard. So although this does look like a decent sell, because you can see right here there was a double top, and then right here a double top as well. So it came down, double top right here, it came down, retraced up, projected off this area, came down, projected off this area again for a double top, and then that's why it entered this sell right here, because it was followed by a double top with a sell momentum signal, which it came down from there. So if you took this trade yesterday, you probably would have made some pretty decent profit off it. Let's see, from entry point, you locked in well over 100 pips on that trade. For GN, looks like, yeah, I'm gonna take GN. We have a sell signal here, so I would have anticipated it to drop farther. But it looks like it just retraced back. It's too risky to enter right now. Yeah, especially when you see a lot of wicks like that, a lot of uncertainty in the market. GU might be a good drop down right there. But yeah, overall, personally, I wouldn't take any trades right now if you're looking for an entry. I don't see anything really worth taking, that looks clear that it'll move in that direction. So personally, I would just sit it out. Let me see. Let me go back to the questions again. So yeah, CT said maybe correlate the 3 time frames. Yeah, definitely. If you're able to, look at all 3 time frames to try to figure out if they're all moving the same direction or something of the like, then that would be good. But honestly, if you're not familiar with the strategy and you're not familiar with analyzing charts very quickly, then it just might not be feasible to you as a new trader. If you want to use that on the 15, the 5-minute, or the 10-minute, I personally would just go with the 10-minute if you're able to. Let me see what else we got here. John Harris is asking, do you adjust the trend meter parameters for normal trading on 10-minute time frame opposed to a scalp setup? No. So let me go back to US 30 real quick. So the settings that I have it set up to would be intraday settings, and that's pretty much where you want to. That's pretty much what you want to know for the day, because the thing is, even if you're scalping, you still want to trade in the direction of the overall trend for that day. So say for scalping on the 5-minute, you still want to see what the trend is like on for that day. But so the difference between scalping on the 5-minute and scalping on the 1-minute is totally different, because on the 1-minute, you're trying to get in and out of trades within 10 to 30 minutes or even less, maybe in a few seconds. So if you're trading on that short of a time frame, then yeah, I would change your trend meter to something less. So like maybe the 1-minute, the 3-minute, 5-minute, and 15-minute, or maybe the 1-minute, 5-minute, 15-minute, and 30-minute, just so you can see where price is going to be moving within that time frame. Because, so let me see, I'm going to try to measure a date range. So yeah, if you're scalping, you're probably not going to hold a trade for more than an hour. So you're going to want to know what the trend is like within this time period right here. So right here, there's obviously no trend. It's going to be hard for you to find an overall trend, during bad market conditions like how it is now. But even if you're scalping US 30 on a shorter time frame, you don't really, the trend would come in handy, but you want to base your trades more so off momentum. Okay, so like I said right here, if you're trading on the 1-minute and you change it to 1-minute, 3-minute, 5-minute, and 15-minute, the shorter time frames, then that'd be perfect, because right here you could pretty much take like every buy signal. Try to delete this thing right here. Yeah, so right here you could have taken this buy right here. And if you're scalping, you're getting in and out of these trades very fast. So right here, as it moved up, you probably would have, done everything manually. Or if you wanted to take, normal trade right here, you move your stop loss to 1,000. And then you can roll it up to 1,000. So that would have been a winner. So this would have won, this would have won, this would have won. And then the market started getting choppy over here. So this might have won if you exited manually. Yeah, I'm not sure what your scalping strategy looks like, but if you're scalping on the 1 minute, you have to really know what you're doing. But if you move over to the 5 minute, you can see that it kind of lines up. So right here, you could have taken this as well. But me, myself, if you're trading on the 5 minute, you're gonna wanna know what the time frame is for the entire day. Because, so let me just map this out. I'll just show you how long it takes for, a 5 minute entry to complete. So right here, if you took this trade, it would have taken an hour and 15 minutes, which is not very long, but price isn't always going to be moving that perfectly. Sometimes you'll be holding this trade for like, I'm trying to find one that ran for a while. Okay, so like right here, this trade right here, I mean, it was a trending trade, so it probably would have filled a little faster. It's about the same. But generally, if you're trading on the 15 minute, I mean on the 5 minute, they're going to last longer than an hour. So you're going to want to know what the overall trend is for the day in case you have to hold on to this trade, for a couple hours. So like something like this right here. So if you take this trade right here, this trade would have taken, see this trade, you would have held on to this trade for like 3 hours, nearly 3 hours. And if your time frame is too short, you only have it up to the 30 minute, it's going to be hard for you to, have a good grasp on the trend for within that time period that you're holding the trade. So personally, I wouldn't go this low unless you're trading on the 1 minute, 1 minute, 2 minute, 3 minute, one of those time frames. If you're trading on the 5 minute, I would just keep it on the intraday. But right now, the trend meter is not really going to line up very often on the intraday, and that's because the current market conditions. And the reason why I have it set to an intraday is because even though you're holding it for a couple hours, if you see what the overall trend is for intraday, like right here, so, and this is one thing that helps you. You can see that you have a longer trend to follow. If you limit yourself to, let's change back. Yeah, if you limit yourself to the shorter time frames, you're not going to find trends very often because price is going to be moving around so fast within the shorter time frames. As you can see right here, it's pretty choppy. It's not very stable. But if we move it to switch it back. So this is the 1 minute, 3 minute, 5 minute, and 15 minute. But if you switch it to the intraday, it's going to be a lot more smoother for you to take entries. See right here, it's all red. So you could have taken all of these sell entries over here. But if you're trading on the 1 minute, obviously this is going to be irrelevant to you because you're not really going to be holding a trade for more than a couple of hours. Let's see. Is there any other questions here? Hey, John, let me know if that answered your question, because I know a lot of people get kind of tripped up on that, on which time frames to put their trend meter at. Personally, if you're trading intraday, I would just leave it at intraday. But if you're trading on something that's moving very fast, like the 1 minute or the 2 minute, maybe 3 minute, if you're trading binary options or something like that, then you can switch to the shorter time frames. But if you're trading spot Forex or any type of assets that you're trading rolling spot, then I would just keep it on intraday because that way, if you get stuck in a trade, you can just look on the bottom because if you're not sure what direction price is moving, like say right here, if price was moving sideways like it was right here, and you were in a sell position, so price is moving sideways right here for like a couple hours. It's just going sideways. and you're in a sell position and you're worried that price isn't going to come back down. The thing is, you just look down at the trend meter and it's red. You're like, okay, I can trust that it's going to come back down, which it ends up doing down here. And that's pretty much what the trend meter is there for. It's there to give you a bird's eye view as to how price is moving and where it's going to move in the future. That's pretty much what it helps you with. It helps you to understand what's going to happen an hour from now, 2 hours from now, to be confident in the specific trade that you're in at that time. Let me see. So there's no more other questions, and it looks like I covered pretty much all the pairs already. So if you guys have any other questions, feel free to drop them in the Q&A real quick. Otherwise, I'll be getting off soon, but I'll still be available in the chat. So if you guys have any other questions that we didn't answer here today, go ahead and message me in the chat. Otherwise, I'll give it a few more minutes just to see if there's anything else. But just a reminder, I do this every Tuesday and Thursday. So if you guys have any other questions or you guys have any theories you want me to cover, feel free to hop on here Tuesday, Thursday, 5 p.m. Pacific Daylight Savings Time, and I can go ahead and answer anything you want real time. Otherwise, I'll give it a couple more minutes. Looks like we've been on this for a little over 2 hours now. So yeah, looks like we covered everything today, guys. It was a great live trading room, even though we didn't do any real live trading except for the US 30 trades and the analysis that I did for the upcoming 4-hour candles on FX. But due to the current market conditions, I'm probably just going to sit out the market, conserve my capital for next week. And then, yeah, we'll start off fresh. But yeah, guys, it was a great live trading room. Like I said, if you guys have any questions, feel free to reach out to me. Otherwise, I'll talk to you guys later.